Thank you very much. Very happy to be here with you this afternoon. Today I have the privilege of interviewing Alain Godard on what effectively the venture capital industry can do to strengthen the European industrial base and to strengthen our sovereignty. Since the start of the year, Alain is the chairman and managing director of the European Fund for Digital Sovereignty. This fund, launched alongside the Scale Up initiative, is meant to address a market gap. Alain will detail, but one statistics is that 3 out of 4 of our most successful startups have fund financing from US investors. So previously, Alain, you were the chief executive of the European Investment Fund. You initiated and promoted the European Scale-Up Initiative, which is also called the Tech Champions Initiative, and you engaged the EIF into a more thematic digital strategy. And before that, you had a long career at the European Investment Bank. So everyone has a few examples in mind. One example that we discussed when preparing this with Alain was the example of BioNTech. We have a European champion in biotech who was able to finance itself at the start with European funds, but very quickly had to resort to US funding, and which, as you know, invented 6 months after COVID and was able to develop the vaccine, which unfortunately had to be produced and developed and distributed with Pfizer. So this is quite an example of what European industry can produce in terms of tech, but what then the financing can be. So Alain, could you please give us your view and your current diagnosis of European late-stage companies' financings?
Thank you, Sophie. Good afternoon, everyone. Yes, the situation is, as you rightly introduced, Sophie, has been improved over a certain number of years now. We can see the latest statistics from PitchBook published recently. You see that the financing available for scale-up companies or growth in general is increasing, which is good news, specifically in terms of proportion vis-à-vis the, let's say, the old fundraising. Now, if we go into more details, it is very true that still a lot of our companies, which we call scale-up companies, are looking for financing from outside Europe in general, outside the EU in particular. And to some extent, there's nothing wrong with this. I mean, we are very happy that investors from non-EU countries, non-European countries invest in Europe. So this is very welcome. At the same time, we see that there's no alternative basically in Europe for startups or scale-ups to get financing apart from going again to get money from funds of a non-EU country. So there's good and bad reasons in this. The good reasons are that these companies look for, at a certain period of time of their growth, for internationalization of their business, or they want simply to get access to big markets, which is frequently the case with the US market, without any barrier, no fragmentation, and therefore they can develop and scale up their business very quickly. So these are the good reasons. Now, when it comes to the bad reasons, is basically when these companies would like to scale up their business from Europe, and they cannot do that because they cannot access to any funding from our fund managers. And there's a lot of consequences to this, obviously, because not only the decision-making may move at one point from Europe to other geographies, but also the development, the quotation at the end. And therefore, we are basically losing, and you gave a very good example of BioNTech, which we quote all the time, which basically announced that they will now develop from the UK for the next project. This is typically an enterprise that we have financed in Europe by European funds, and who developed, we know, in the context of the COVID, and get access to funding from US partners. And we know also what happens later on, which is the industrialization of a vaccine and the production abroad. Therefore, this is a perfect example, but we have plenty of examples of that sort, meaning that we think that something has to be done to address this market gap in Europe and to promote our global champions in Europe with global fund managers from Europe.
So effectively what you're saying is that the consequences of having US investing is not only giving access to the US market, but is also to get to decisions which are not favorable to European industry. Is this what you're saying basically?
Yes, I mean this is not a secret for anyone. And we have fund managers in this room. When it comes to scaling up your company, you have often to face significant challenges, and you need to find most of the time new talents. And it could be, having a new CFO, a new CIO, a certain number of key competencies in the companies. And therefore, if your company has moved to a US market, for example, but it could be also in Asia, therefore, you tend to get your talent either from Europe moving to these geographies or coming from the geographies themselves. So indeed, there's indeed a clearly implication. Same for the quotation. We know and we have examples that are public whereby some fund managers located again in non-EU geographies may ask the company to introduce a clause for a introduction, an IPO in the non-EU or non-European geographies. So this is very concrete at the end, and we have to take care of that.
So effectively, we have seen a European venture market which still has been booming, with venture funds gaining scale. Last year, which was a difficult year for geopolitical reasons, with rising interest rates, there was still 80 billion euros, which was effectively invested by the VC industry in Europe. But what dimension in terms of the size of those companies? So basically, we see that it has been invested mostly in startups, but then when you reach a certain size, the issue is scale up. So what's the digital initiative which you are leading? How do you intend to fill that gap? What is your strategy and your objectives in your new job?
So indeed, I can take an example, some statistics that are also very well known by everyone. We have about, in the US, for example, 40 funds of an average size of 2 billion. That's what we have identified. And in Europe, as we know, we have about 3 of an average size of 1 billion. So more are in the pipe, but the situation is this one today. Therefore, when a company scale up, it needs additional money, and usually the tickets that are at stake are much higher than the one we provide, let's say, when it comes to early stage. So we are talking basically about tickets of between 30, 40, 50 and beyond million. And therefore, in view of the panorama of investment fund in Europe, not many can follow up, with the consequences of, for some of them, exiting, so taking the opportunity to exit, which is not wrong, but at the same time, it is again a leadership that is taken by non-European funds at this stage. So the initiative is indeed to finance. It has been announced last year in February by the ministers of finance of Europe, at least 22. So 22 ministers and countries supported this initiative, so which is quite remarkable. I mean, in Europe for a pan-European initiative. The idea is to build up a fund of 5 to 10 billions, supporting the emergence, creation of 15 to 20 funds of 1 billion plus. This would give us, we think, the capacity. I mean, when comparing to the US, one may say that this is not enough, but we think that this would be already a significant step in the right direction. And what I can say also is there's a clear appetite, not only from the public sector, but also from the private sector to come in as well, and therefore to inject and participate, co-invest into these funds. And therefore, I do believe that there's not only appetite, but also quite a capacity in Europe to build these funds in the next 3 to 5 years.
So basically, you would be at the outset and pushing for an ecosystem that would accelerate with the help of governments and with the help of this European initiative. Is that correct?
It's correct. Actually, this initiative goes a bit beyond. I mean, for the ones that are familiar with the work that have been initiated in Germany already 3 years ago under the European Tech Champion Initiative, but also more recently by the French under the Scale Up Initiative, all this work lead to the same conclusion. We need to accelerate. That's one. And clearly, I mean, what we will put on the market with probably a first closing at about between 3.5 and 4 billions already by February. That would be an accelerator indeed. But it's not enough. I mean, what the vision that we have is to go beyond this and to provide the conditions, the market conditions, so that we attract more private sector in Europe. And therefore, we need more market transparencies. And I know your work and your contribution, Sophie, in this area. This is very important, that we provide more transparency in the market, more data at the end. Therefore, to attract private sector's money, institutional investors, but not only. It's also about individuals at large. And therefore, this is the second pillar of the initiative or the vision. The third pillar would be, once providing enough liquidity, to create centers of quotation. So European Nasdaqs, I put an S because we will see where we will land at the end of the day. But you see, this is something that we need to project, which goes beyond simple investment into big players that we need in Europe, but we need to have also this vision to go much beyond. Public money is a scarce resource, as we know, and therefore only the private sector's money would be able to maintain, attract, and also make a resilient market for this specific segment, which is also very important when it comes to preparing companies for IPOs and beyond. And hence, I mean, our discussion before with Sophie about crossover funds, which are also missing in the European landscape.
Yes, effectively, there is a continuum in the tech industry between the private investing and then with the ultimate aim of going to the public market. Although not all companies will come to an IPO, it must be one of the options that is available for the development of those companies. Hence, the link with the Capital Markets Union and everything that Europe will do in terms of creating an attractive public market. And more recently, effectively, there has been initiatives, as you probably know, with the Listing Act of the European Commission to create the conditions of helping the access to public markets for private companies. So what is your view on Capital Markets Union? You are very close to the European Commission, to Brussels. So do you think that there is an effective dedicated strategy and that we're going to reach to that Capital Markets Union?
So this is, I would say, a topic that has been on the top of the agenda of the European Union and the member states for already, as we know, many years, starting also with the banking union, but capital market union, integration of the market and so on, are obviously an important aspect of the project. And it's very important that you put this light in relation to our topic today, because we need both this pillar of investment with all the elements that we are talking about, but we need also the second pillar, which is the one that provide integration to the European market. And I'd like to say, because in the good reasons or the bad reasons that I mentioned before, for which a company is going abroad, and notably in the US, we have indeed very much a concern of not offering the same conditions in Europe for a company to develop. And I have frequently discussion with entrepreneurs abroad, European entrepreneurs, which mention very often the fact that they go much faster developing in the US market. And therefore, we need indeed in the big picture to keep well in mind that financing is an important aspect, as we know. But we need also to make a lot of progress in the direction of bankruptcy act and many other. It's also about bureaucratic, exercises. Unification of a certain number of processes to set up a company, but also to develop, to exchange, to cross-border operations, and so on and so forth. So all this is indeed extremely important for the market overall, not only for the VCs, the startup and scale-up, but obviously also for, let's say, more traditional companies.
Especially since after Brexit, we've seen the UK market becoming also a competitor to our markets, and then we have to take into account that desire of the city to continue to have an impact and to provide an attractive listing place. I have a question also on how you're going to structure your fund. Why did you decide to do only a fund of funds, and why not investing directly in those companies?
Yeah, so maybe two responses to this. The first one was the efficiency and the time, which is of essence in this market. We have been seeing, again, a lot of our firms moving and getting financing from abroad. Again, not against any financing, which is very fine. But what we observe since the last months is some wait and see attitude from a certain number of non-European funds vis-à-vis this market, this scale-up and growth market. And therefore, this initiative is even more important than before because we need to provide quickly and swiftly financing to fund managers so that they continue to support our companies. So that's one element of my response. The second is vis-à-vis maybe what we hear from time to time. This is very much à la mode recently, which is a reference to a sovereign fund, but more in the sense of industrial sovereign funds. This is something that is, I would say, different from what we are doing. Not that this is incompatible, on the opposite. This is very much compatible. But the reasoning and the motivation behind is quite different. Here, with this initiative, we are building, again, beyond the financing we will provide to the companies, to the startup and scale-up. We will develop a market, which, again, I insist, but this is very much and very important, I mean, for the future of the European VC market. A more traditional sovereign fund, industrial sovereign fund, is more in relation to, I would say, more industrialized or industrial companies today. And therefore, this is, in a way, the concept that we have in certain countries in Europe, whereby you have a national agency being, in a way, and this is maybe the link with our discussion today, anchor investor in some companies that have the ambitions to become, let's say, global, European, of course, but then global. I see this project personally not immediate. I think this would require a lot of thought before we get to that point. Doing such an initiative at the level of Europe may raise a certain number of complexity that I see difficult to address very quickly.
So the political will behind it is really to develop industrial sovereignty, and industrial sovereignty on our grounds. Are there any maybe topics or sectors of the industry that you see should be in your target?
I think, I mean, there would be no surprise. I mean, from the COVID crisis, clearly health has been quite, and biotech and so on, pharma has been quite a priority for some years now already. But not only, I mean, we see the emergence of quite strategic or independent, autonomous sectors. I'm thinking about security, of course, cyber security. Defense is not really a taboo anymore. Also, we have been financing and fund managers as well, dual technology for years and decades. I see also, and a lot has been done in this area, a lot about space, the space sector, which is also becoming very strategic. Even more strategic. I mean, when we see and we have seen recently in December the failure of the Vega launcher. So, and waiting for Ariane 6 to come. I mean, there's clearly an issue there as well when it comes to the launcher, but it is also very much important when it comes to data, to information. I mean, all this is related to satellites. And you can imagine that in the current environment, this is becoming also very, very, very important sector to develop.
Okay, well, thank you very much, Alain. I think it's an interesting topic, and I'm sure there are a lot of people in the audience who would like to be able to bring their ideas to the debate, to ask questions. So we'll leave the floor now for questions.
Yes, maybe to dig into the missing link that you're trying to address. You mentioned the listed market and you mentioned the crossover. So probably that means you are alluding to the fact that you may back funds which could invest on private and public markets as opposed to the classic private equity funds going only for private. Will you back crossover funds or even maybe funds who do IPO only type of investment or IPO and post-IPO funds? Is that part of your mandate / investment thesis?
I think what is missing in this market is not necessarily players in the public market. What we are missing is indeed the capacity to accompany this startup for IPOs before, during, and after IPO. And we have observed, including in Europe, quite a number of cases whereby this is a quite a tricky time for startup, scale up. And we think that indeed it would be our duty to support fund managers who would be able, not necessarily to target, let's say, investment directly in the public market, but to be able to indeed bring these companies through the IPO and stay after IPOs as an anchor investor.
Yes, thank you very much. Could you give us some color regarding your allocation strategy in terms of type of managers that you're looking for and geography scope?
So this is a European EU initiatives. So we will expect to support fund managers that will at least locate in EU. I think it's important that we do not exclude financing fund managers that have been very successful outside the EU so far. At the same time, it would be quite odd for us not to promote what I was talking about before, which is promoting the market in the EU. And therefore, also not, let's say, excluding, first of all, investment outside the EU, nor investor in fund managers outside, let's say, the EU. We would expect them to develop and to promote, create teams within the EU.
Charles, I was sure that you were going to ask a question, so thank you.
It's a very practical question. What are we talking in terms of tickets? If I may use that word, of maybe what type of amount the fund would invest in the funds that are to be selected.
And you know for that the structure that we have adopted, again, to go very fast and be able to provide funds very quickly already this year on the market. We will be relying on the EIF, the European Investment Fund, teams, who some of them are in the room today, who would be able, to be the interface with fund managers and provide all the supports for that. About your question in terms of the tickets, obviously this initiative is about creating bigger funds, so therefore you can expect bigger tickets. You know that EIF has been, let's say, capping more or less its investment because of resource capacity, generally at about 100 millions. Okay, max, a bit more for certain transactions, but very rarely. Here we would start a ticket from 100 million and beyond. I don't want to be too precise here because it will depend very much on the proposals that will be made to the EIF experts, but it would be significantly bigger than the tickets that we have been able to do so far.
So thank you very much, Alain. It's a very ambitious objective that you have. I think everyone will be looking forward to what you do. It's very important for our industry. And personally, I will certainly support this initiative, be happy to see crossover funds and the ability to support as anchor investors as well in IPOs. So why not invest directly in IPOs? We'll see that. Thank you very much for your time.
Thank you very much.